Welcome back. The recovery continues in our markets. The Nifty is above 24,300. The day's low today was below 24,200. So now it's over a 100-point recovery that we've seen as the day has progressed. Jitendra Gohil, Chief Investment Strategy Officer, is now with us on the show. Jitendra, thank you very much for joining in. How do you feel about the markets now? It refuses to fall down. We haven't seen more than a 10% correction in the last 2 years. And now the FIs have also started participating in the markets over the last 2 months. So what's the view?
Hi, Reema. So it's not just India. If I look at even the US markets, that is also on a bull run. We have seen the P ratios of S&P 500 is currently around 21, 22 times. Even Japanese market is trading at 22 times P ratio. So large caps India trading at around 20 and a half. I think it is still not extremely overvalued. Obviously, the valuation is stretched compared to the historical averages. But if I look at the other markets globally, still our large cap indices are still at a reasonable valuations. So in our investment committee, we decided to stay neutral. We think that the portfolio should be fully deployed. We think that, the large caps are in a better position compared to mid caps. Mid caps are trading at almost 33 times forward PE ratios. So net, we think that we are in a structural bull market. There might be 3, 5, 10% correction due to any global events. But eventually, I feel that we are in a structural bull market where earnings are going to grow and compound at more than 15%, our view. And we still believe that the macro is so strong. In the second half, we might see more upgrades to India's GDP growth. And in fact, in the next 12 to 18 months, if we see rating upgrade for Indian, as a country, I think we might see elevated valuation for Indian equities. So we remain, we recommend to stay invested, mostly in large caps, and cut some of the exposures in mid cap where we see some kind of fraud building up.
All right. Hi, Jitendra. Good afternoon and good to see you in. Nigel on this side. So you want to put a percentage to that? 70% of your portfolio should be in large cap. Would that be a fair estimate?
So Nigel, we have recommended earlier 70 in large cap and 30 in mid caps. Recently, we have cut down that to 80-20, 80 in favor of large cap and 20 in mid cap. So right now we are somewhere 80 in large and 20 in mid caps.
What do you like then from the large cap names? I recall a few months ago, if I remember correctly, you were one of the first who were saying that maybe, this chemical cycle pain, it could be coming to an end and maybe things could gradually start looking up in the second half of this calendar year. Which are the themes you like? And if you want to put a quick comment on chemicals.
Sure. So Nigel, we think that first, in the second half, there are certain triggers that we are, monitoring. And we think that the trigger would be first is, robust GDP numbers. We think that the earnings also might see some uptick. So already at the beginning of the year, when we look at FY26 numbers, we were somewhere around 1,230 odd. And today, as we speak, we are reaching towards 1,280, and some analysts are also at 1,300. So we have seen earnings upgrades have started picking up. Second, we think that the budget is going to be extremely crucial. Government has around 1 lakh to 1,25,000 crores of additional spending headroom. And as we go forward, I think the tax collection may surprise on the upside. So the headroom is going to even improve in the second half. So net, we think that some of the economy facing stock, especially the rural focused NBFCs, those are the sectors that we like the most. Second, we think that consumption has been consumption was weak, and we think that after the budget there could be some traction there because the monsoon so far has started on a good note. And we feel that the rural consumption, which was languishing, probably might come up. So some of the fertilizer names, some of the chemical companies which are focused on rural side, those might start to see some buying interest, and we have been positioned, accordingly. The third thing, as you mentioned about chemical cycle, I think it's company by company. Still, the destocking cycle is not completely over. But looking at valuation, looking at the global destocking, which seems to be over, I feel there are pockets of opportunity in the chemical space where we think that some of the niche chemical companies having decent EBITDA margin, great market share, and also exposed to some export opportunities. I think there we might see more buying interest. So net, we think that sectors which haven't participated yet fully, especially chemical cycle or chemical stocks or some of the rural focused names, I think there we are positioned from second half perspective.
Got that, Jitendra. Hi, good afternoon. Life insurers, do you own any? We reported earlier that there is price increases, not very large, but on the term side, which is a very profitable product for most insurance companies, we're going to see price hikes. Anything you like here?
Yeah, Prashant. So overall financials, we have been neutral, but we had constructive stance on banks. Now we feel that, looking at some of the PSU banks and, some political compulsions, the government might announce some kind of freebies or, there is some concern about loan waivers and the behavior of the borrowers. So we feel that there could be some rotation happening within the financials towards mostly the insurance companies or towards the AMC companies, and those are into this value chain. So I feel, yes, we think that within financials, insurance companies, AMC companies, and the intermediaries are better positioned as a whole. And coming to life insurance, we think that the margins overall has stabilized, and we feel that in the next few quarters or so, we might see some benefit coming in as margin starts to see some expansion, as some of the companies have started to improve their product mix. So overall, I feel that, yes, slight marginal outperformance is possible from the life insurance companies. But we particularly like the PSU life insurance company due to the valuations, which are reasonably okay as of now.
Okay, like PSU life insurance company. Jitendra, what have you made of the latest turf war between hybrid versus SUVs? What's your own thought process over what's happening?
Reema, see, my view was that, look, EVs penetration will improve, but the kind of euphoria that we were seeing for EVs, especially country like India, I think we need some technology we can transition from fossil fuels towards the clean energy, and I think hybrid fits the bill. And I don't know why we haven't announced these kind of measures so far. But I definitely feel that for a country like India, this is going to be a good move, as I feel that, hypothetically also, if you see that all the vehicles are, let's say, operated through hybrid engine, then there's a possibility to reduce our oil bill by half, right? Because the mileage that you get from the hybrid vehicle. So I feel that this is a good move, and the companies that are exposed, that have technological advantage in that field, are going to benefit. And this is, I think, this one state has announced, but if we see structural, or you can say, announcement from central government or from other states as well, I feel this is going to be definitely a kind of thing that the OEMs will have to take into account. But I'm not, completely negating that the EV export opportunities. I think there are certain companies which have done phenomenally better. So I feel net, this move is positive, and there will be some shift happening from portfolio perspective because of this announcement.
No, absolutely. Jitendra, we'll leave it there for now. Thank you very much for joining us and running us through all that you are making of the market and what you like at this stage. Well, it's time for our special segment.